Nigeria, of course, we've seen the market extending the recent rallies. The NSE index closing at 34,584 points, up about 0.6%. Let's now move on to Diamond Bank, where Linus Iwuajoku, head of research and intelligence, is standing by to give us some perspective on the market's rally. Linus, thank you so much for joining us. And I think a good place to start will be the bank results we've seen so far. They've given the market a bit of a lift over the last few sessions. Your thoughts about the numbers we've seen so far?
Yeah, thank you, Wole. Yeah, we've seen about 5 or 6 corporate results that came in. We've seen Zenith, coming in with about 100, billion profit, the first to hit that mark. We also saw GT, coming in with about 87 billion too. We saw Sterling, we saw Access Bank, coming in. And all these results have, definitely lifted the market, especially the banking stock. But surprisingly, GT lost yesterday, despite declaring $1.30 dividend. Perhaps, some analysts believe that GT is selling at about 27.45 before yesterday was somehow overweight. Now we saw the share price coming down to about 25 plus. But overall, we expect that the corporate result that we have seen and the kind of dividend they have declared, will continue to lift the market. And if you also look at like Okumo Oil, the result they showed too lifted their share price yesterday, and they gained by about almost 10 naira. And these are a reflection of the good performance that we are seeing, most companies turning to the market. Okay,
so good results from the banks, good dividend payments. But looking forward, that is the big question. You may have just picked up that interview I just had with Victor. And the key risk going forward will be earnings for banks and the pressure from the regulatory changes with respect to things like commission on transaction, ATM charges. It seems like the central bank is out there to just grab all the charges on commissions and fees that the banks are used to getting, many will argue, easy money from. So your thoughts about how banks are likely to react to this?
Yeah, clearly what is happening in the market, especially in 2013, shows that the banks are likely going to operate, in a period where the margin are completely shrunk. And if you look at recent development, especially with the recent circular from CBN, trying to phase out COT completely, from the bank's bottom line. And, if you also look at, the effort of CBN trying to increase the rate on deposit by fixing at 30%, of MPR, which gives you about 3.6% minimum that banks expect to pay on savings accounts. And if you also look at some other development, especially, the shrinking, yield on bond and treasury bills, all this will, definitely conspire to put so much pressure on, on bank managers. And considering the fact that a lot of banks, did well in 2012, so a lot of bank managers will be under severe pressure to return the kind of number they returned in 2012 in an era where the margin is shrinking. Already we have seen ATM charges gone off, even though some banks are trying to make effort to reintroduce it.
I was just going to get to that. How are the banks reacting to these changes? Clearly they have to find ways to make up for this, otherwise there's going to be some huge pressure on their earnings.
Yeah, I think what most banks are likely going to do is for them to begin to search for new, profit pools, since this line of income has been reduced. But one thing you should also note is that even before now, a lot of top blue chip companies are already enjoying concession, from most banks. So the people that will actually gain from these CBN directives are individuals, and small cap companies who their turnover was not big enough for them to enjoy concession. But we are going to see banks, turn to other ways, especially most of them will go, through retail banking to generate cheap funds and continue to play in the fixed income market, even though we are going to see yield in that area continue to, to come down.
But what about lending? Do you think banks are going to lend a little more as a result of these changes?
No, definitely, because banks are going to come under severe pressure, to increase their earnings. So we are going to see banks continue to search for new risk assets, especially in the telecoms and the power sector. So we are going to see possibility of banks, improving their loan book, maybe around about 25% in 2013. But, we must also highlight the fact that when banks become a little bit bullish in trying to create risk assets to cover the shortfall in their income, we might see the crippling of NPL in most bank books in the years to come.